Our lovely traders. It is so good to have you here. And I'm really excited for this session because it is this time of the time of the year when it's time to review. How did this year go? And what are the plans of moving forwards? So, look, one thing that I want to highlight is that if this year has not given you the results that you would have wanted, this is your opportunity to take control back. This is your opportunity to review what has gone right, what has gone wrong, what were the most common mistakes that you were making, what were the things that were helping you to flourish. Because essentially, in trading, it is about finding out what works and what doesn't work and focusing on the things that will help you grow and focusing on minimizing the things that are potentially standing in your way in terms of your growth. And this is what this session is going to be dedicated towards. And really, there is so much I can do within this session because I can give you the framework, I can give you the explanation. However, it is now down to you to utilize that knowledge and the knowledge that had been given to you in the past few months in terms of our trading psychology webinars and workshops. And it is all about you taking that knowledge and really implementing it in terms of your review, in terms of the insightful review about your work ethic, about your trading edge in terms of mathematics, in terms of the strategy, in terms of your mindset, in terms of your risk management. And by understanding that and having that insight into yourself, you can implement changes into going to 2024. So I really want you to go back to our Sunday session. This is where we had our webinar and we discussed the psychological impact and importance of your trading plans. And we had plenty of other sessions that we talked about trading psychology and different aspects of trading psychology. Now, if you would like to refer back to any of our workshops and webinars, please go to our YouTube channel and we have on Funding Pips the whole playlist of all of our sessions. Now, if you're a returning trader, today, welcome back. And if you're a new trader, it's so great to have you here. And please don't feel lost if I'm going to be referring to any of the webinars that we have done before, because you can go back to them on our playlist. And another thing that I just want you to pay attention to, that we have 12% discount on all of the challenges at the moment. But anyway, without further ado, let's move to our first slide. So here, yearly reflection on your trading performance. And this is where I will not really go into why it is important, because you know what it is important. It is necessary for your trading growth. But I will give you guidance and I will give you a breakdown of things that you could implement. And there is a standardized kind of framework to apply. However, I do understand that there will be a variety in terms of each trader, and different things will play bigger importance to your reflection and into you putting it into plan than other things. And that is okay. There might be some things that you think, oh, I'm good with that. But overall, just take it in and then think about what is important. So first of all, in order to start your trading reflection, yearly reflection is, well, there are two factors to it. Number one, you perhaps already may have been doing quarterly reviews. And if you haven't, then I would suggest that this is something that you focus on in 2024. And that is every 3 months going into the insight of how did your quarter go. And that's precisely how fund managers are looking at their performance, banks, how they're looking at their performance in terms of trading and investing. And that can then help you to make the yearly review quicker and more effective, because Then you are basically reviewing an outcome of each quarter in order to understand how did your year go. However, if you haven't done that and you have not been reviewing each quarter, then you're going to have a bit of a harder task, because you will have to look at things from the bigger perspective and review the last 12 months. But that is okay. Honestly, it will be worth putting that work into it in order for you to have better understanding. So first of all, in order for you to understand what has happened within the last 12 months, you need to gather the data and you need to understand what was your goal. Maybe you didn't have a goal. Maybe you had a goal, brief goal in your head about what you wanted to achieve. Or maybe you had a very specific goal that you wanted to be funded with X amount of money by the end of 2023. Now, first of all, you have to review whether you have achieved that goal or not. And the answer is not going to be as simple as yes or no, although it could be, because perhaps you wanted to be funded by 200K, but you are funded by 50K. All right, so you are still funded, but perhaps you have underachieved your main goal. Perhaps you wanted to be funded with 200K, but you are funded with 300K. So you actually overachieved your goal. Or perhaps in terms of the achievement of this year, you wanted to be funded, but you may not be yet. And that is also all right, because this is all about understanding why those things happened and what was your road, what happened on that road, and how you can improve moving into 2024. Because one of the most important things that you have to remember about is to always learn, to not allow for those lessons to go to waste, because those mistakes or failures or, invested money, those are only losses if you will allow for all of it to go to waste. But if you actually will implement it in your reflection, if you actually will use it as a lesson, then it is a fee. Then it is a cost of running a business. Then it is a fee that you paid towards your self-education and you invested in yourself. But please utilize it. Utilize that opportunity to learn about what happened in 2023. So gather the data. Understand, okay, your goal. Have you achieved your goal? Yes or no? It's a simple yes or no. And there might be something in between explanation. And in order to understand why you achieved your goal or how you have not achieved your goal, this is where you need to gather data. And only with that data you can understand if you got to where you wanted to be. Because if you achieved your goal, then the review is still as important for you as for you who has not achieved your goal. Because if you have achieved your goal, that is fantastic. We need to understand what were the set of behaviors and choices that you have done over and over and over and over again that got you towards your goal. We need to understand it, and we need to help you capitalize on it in 2024 and focus on those factors and become more of an expert in those areas. But if you haven't achieved certain things, well, we need to gather data and we need to understand why those things did not happen to you. So first of all, you should have compiled data. And this is why I'm going to give you a guideline. This is why I'm going to give you details about how to review your year, but really it is down to you what you are going to do with that information, and it is now down to you to put in that work, because I cannot do it for you. So compile the trading data. You either will already have that trading data for a year, which you should, or you may not. So if you don't, again, the road of reviewing your year might be harder, because you will have to go back on your charts to January 2023 and month by month, week by week, day by day, look at the trades that you have potentially would have taken or have taken, and review all of the data according to your trading plan. If you already do have that data, then obviously you need to assess that data against your trading goals. But first of all, compile it, have that data to understand it. So you either have that data, which the job is done. If you don't have that data, you need to gather that data, because without understanding what type of trades you were taking, What were your entries, what were your exits, and all of that. It is going to be extremely difficult to understand where you went right and where you went wrong. So it is really your job to do that now. Now, for the goals that have not been met, you should reflect on why and how you deviated from your goals. You should understand that. How and why you have deviated from your goals. And you will have the answers. You have the answers. You know what made you deviate. And look, there could be different answers. It's not straightforward, and everybody will have different reasons. And there is not a right or wrong answer. We are all human. We're experiencing life. We're experiencing different circumstances. There are different things that are happening in our lives, and those things will have impact. If somebody was not in a good financial situation, or their 9 to 5 job was threatened and they were scared they were also going to lose their job, etc., etc., perhaps you had extreme financial pressure on you. There could be other factors in your personal life that were happening, and they may have influenced your decision making because of the stress levels that you were experiencing. So, all of those things have to be taken into consideration, and you should write clearly out why you deviated from your plan and reflect on it. Now, if your goals were not set, then of course I encourage you to consider the importance of the goal setting for the upcoming year. And if you do not know how to set your goals, we have a perfect solution for you, because one of our first webinars on our Funding Pips playlist is about goal setting. And you can go back to that webinar and you can watch, first of all, explaining the importance of it, and secondly, how to do it. Because I tell you one thing, and this is just a reminder, in January, everybody will be motivated. Okay? In January, everybody will be motivated when it comes to their trading, their diet, their membership, gym membership sign-ups. Everybody will be there. But that is going to fade away as the year goes on. And the reason is because people don't see the immediate results. And as people, we are very, very results driven individuals. So this is the reason for you to understand your big goal. So i.e. person going to the gym and they wanting to shift, let's say 10 kg, okay, whether that is 10 kg someone wants, to build their muscle up, or 10 kg down. And this is where, from that goal, you need to set yourself realistic milestones. You cannot lose 10 kg within a month, and you cannot maybe gain 10 kg within a month. So you need to do realistic milestones where you can say to yourself that in a month I want to lose 2 kg, and then another month I'm targeting another 2 kg, and then 3 kg, and you are slowly working your way to your goal. And then each month you are kind of like, okay, I've met my goal, I am a little bit under 2 kg that I have lost, or I have lost more than 2 kg. And this is the way of tracking your performance on a monthly basis, which keeps you much motivated and keeps you going. Motivation is nothing other than emotion, okay? And this is the reason why people start in January and they never persevere with their goals, because they do not feel motivated. Whilst when you see what you are heading towards, whilst you are achieving your smaller milestones, this will fuel that motivation and that feeling. And of course, we know that the motivation doesn't get you to your goals, it's the discipline that does. But we need to have that perfect combination and that perfect balance between motivation and between discipline, because we want to be fueled, we want to see the results, we want to understand what we are heading towards. You have to do exactly the same for your trading goals. Nobody becomes, let's say, 1 million funded trader just straight off the bat. You may have to work those little steps of first becoming funded with 25k and then 100k and so forth and so on. As long as there is trajectory, as long as there is a way of understanding what you are doing and where you are heading towards. Okay, so going back, just for a quick recap, you need to, number one, compile all of your trades, and you need to have that comprehensive log. If you haven't done it, you will have to do it. Okay. And that is going to help you to understand what were, and hold on, if you haven't done it, you should understand obviously the dates. You should have the name of the ticker of the instrument. You should understand your entry and exit points. You should understand your trade size. So whether you were trading 0.5%, 1%, what was the lot size? You should understand what was your profit and loss factor. So what was your per trade standardized profit factor or loss factor? Or maybe there wasn't a standardized way because you were taking what the market offered you, but then you should understand the averages of what was the return for your trades. Now, you need to then, as you will have that data, so that's number two, data is there, okay? Number two, when you have that data, this is where you have to understand the instances of the trade outcome. So let's say your trade was 1 to 3 and everything went to the plan, price came back to the, to the level, and then you had the break of structure, whatever, you had entrance, and then price went up. So you have to then understand the instances of your winning trades when the plan was followed. What was the results if the plan was followed? So really, you would have two pieces of data in terms of two different logs. One log, what were the actual results for the year? And what would be the results if you stuck to your trading plan? If you allowed for your trades to play out? If you did not get emotional? If you did not cut your profit short? If you did not get analysis paralysis? If you did not over leverage your positions? Because you will have the actual result and you should have the understanding of what your result would have been if you didn't interfere with your strategy. So then that will help you to note and understand the reasons for the deviations from your strategy and why those deviations had an impact on your trading outcomes. And you will then understand that every single time I was in a trade longer than for 3 hours, I started deviating from my plan. I started closing my profits early, this or the other. And you need to understand a few things about yourself. One, you're either micromanaging your trades. Two, you're getting too attached to the outcome. Three, maybe you should focus on managing yourself better and the type of trades that you take in terms of longevity and sitting in those trades. Maybe you're going to be a better scalper than day trader, etc., etc. All of those different things that you need to understand. As you then understand that you might be struggling sitting in a trade where there are strong levels, then maybe you shouldn't get into the trades near strong levels because you understand it's a strong level and you still get into the trade, and then trade moves up and down for 3 hours and it makes you feel uneasy. So then you should be preventative preventative in terms of how you're going to feel in a certain situation, because you know yourself about what works, what doesn't work. Or maybe you need to implement techniques that whilst you are sitting in those trades, what will you be doing to distract yourself from the fact that you are sitting in a trade? Because really, once you get in that trade, you should accept the risk. You should accept it that it is likely to be a loss. And this is a very helpful way of thinking about things, because it can help you understand, okay, I am ready to invest that money. If we lose that money, we are okay. Then you should also record and understand whether there were any events in the markets that influenced your trading decisions or outcomes. So I give you an example. If you, for example, traded news, okay, and you traded news 5 times, but 3 times in a row, you got lucky about news. And let's say you scored 1 to 10 each time or something of that sort. You need to then understand whether this statistic from this news is actually going to influence your overall edge in terms of understanding your edge, because this is an outlier, because usually you take 1 to 2 or 1 to 3, okay? But you have some outliers in your data where you were actually trading news, and then you think that your risk reward is actually a lot higher, that let's say the average is 1 to 5, where actually it is not, only because you got lucky during news. This is why your risk and your return factor is higher to what it actually is. You need to understand the broader picture of the market movements and what has happened in a whole year, and what was your decision making in all of that, and what influenced it, because everything works in patterns. So let's move on. This is where we go into the technical analysis review and now more understanding of your strategy. So you need to perform the comprehensive now performance analysis. So you've gathered your data and you've got 2 logs of data. That's why I would recommend you may want to do it differently. One is, what were the actual trades that you took? What is the actual outcome for the year? And listen, there were times when I was not so good at keeping up with my trading journals. And then when it was a quarterly review, I would then sit down and I would go through every single trade for those 3 months. And I would sit there the whole weekend just gathering the data to understand what would have been my trades. I made my job a lot harder that way. This is the reason why it's better now to do it ahead of time. The second log of data, so that is one, the actual result. The second log of data should be just trades according to your trading plan, not emotions, none of that, and not specifically the trades you took. Those you should perform analysis of, what if I allowed for my trading edge to play out? What would my result be? So then you can compare your actual result. We're going to call it AR, actual results, which is inflicted with emotions, self-sabotaging behaviors, impatience, greed, news trading, and cutting your losses short, analysis paralysis. And the second set of data should be actual AC, actual results. So this is where we just have pure mathematical results in terms of what would the outcome be. And that outcome is going to show you, for results number 2, what you could have achieved if none of these factors influenced you. And that's going to open your mind, trust me. Just seeing those different sets of results and seeing, where am I actually, because of myself, or where I could have been if I actually allowed for my trading strategy to play out. That's number 1. Now, once you have that data, and now we are talking about your actual data, okay? Actual data, actual results / actual results, so they were inflicted with emotion, they were inflicted with other factors. This is where you need to start understanding your profit and loss factors here. I need to calculate what would be, or what should be, the profit, and where was your mistakes in terms of your poor risk management. So then you will see, for example, this is what was according to my plan, and this is what I actually have done. So my, due to fear, actual profit factor was 1 to 2, but I could have easily got 1 to 4 out of my trades. Now that I am looking at the whole data for the whole year, I thought that I am a trader that, can only squeeze out of the markets 1 to 2. But seeing that my approach actually can easily give me 1 to 4s. All right. And this could be the knowledge that you could be taking into 2024, that you no longer are going to hold trades for 1 to 2, but you can easily start taking 1 to 4, and it will not affect your win rate or anything like that. It's not about win rate. It's about risk to reward ratio. So the win rate may still remain, let's say, at 50%. So still half of the trades that you take will lose, half of the trades that you will take will win. But instead of taking 1 to 2 within your win rate, you will start taking 1 to 4 within your win rate. And that is something you need to consider. You need to look at it in terms of, okay, was that possible? Was that not? I give you another example. There was a trader that used to trade on 1 minute time frame, and their return for 3 months was 131R. So forget about risk per trade, because risk per trade could have been 1%, risk per trade could have been 0.5%, could have been 0.3%. I just want to point something out. So their return profit was 131R. The overall number of trades was 260 trades. Okay. So they have taken 260, they won 131, therefore they lost 129 trades. And essentially, when you look at these statistics, this profit factor is 1 to 2, because half was lost, half was won. So instead of hustling and bustling on a 1 minute time frame, where they were feeling stressed, when they were felt more triggered in terms of impulsivity, in terms of impatience, in terms of big losing streaks that they could take 6 to 10 losses in a row before the winner came, they actually then reduced the profit factor to 1 to 2, because at the end it would have worked out exactly the same. And they started trading on 5 to 15 minutes time frame in terms of entries, and they were more stress-free because they had bigger stop loss sizes, and they just allowed for the trades to play out, which then the losing streaks decreased to, I believe, 4 as a maximum, and then the winning streaks, I think, remained pretty much the same. But at the end, when this quarter was compared to this quarter, it was also the same result. So something to consider. Maybe you don't need to stress yourself out on certain time frames. Overall, you should understand your risk-reward ratio and what would have been at the end. Then understand your data on a deeper level. Understand what was your biggest winning streak. And obviously, this is something that you should understand about your data anyway, from backtesting, from forward testing. You should understand that, because understanding your winning streak and your losing streak will help you to prepare how to take on the challenge. If, for example, your biggest losing streak is 6, so then risking 1% per trade could mean that you will be on minus 6% after 6 trades after you start the challenge. So perhaps that is not the best. Perhaps you should go with 0.5%. So then after your losing streak, you are on minus 3% rather than minus 6%. It's easier to stomach. Whereas if your biggest losing streak might be 2 trades based on your data, then 1% risk per trade is not a problem, because at the maximum, according to your data, it is going to be 2%. However, when we backtest things, it is different when we actually bring it into the live markets, because the live markets is different. The backtested data, understanding your data, is going to give you an insight of the potential. However, it is different to actually executing in a live market. So this is where you should understand that actually based on your performance, so not on your backtested performance, on your performance from the markets from 2023, what was your biggest winning streak in terms of trades per day? Or maybe you had a weekly winning streak, or maybe a monthly. What was your winning streak? What did your best week look like? What did your best month look like? Once you understand what was your best week like in the markets, best day in the markets, best month in the markets, dive deeper. What did you do? Were there any specific entry criteria? Were there specific extra confluences you were looking for? Was there any different risk management that you have used? Were there any specific exit points? What was the management technique? Was it the same? If it was the same, that's fine. Was it different? What were the differences? Understand it, because understanding your best performed week, month trades You may notice certain patterns, that there is a specific entry model for a specific time of the week, time of the month. You may notice something that third week of every month, something specific happens in a market, and you may notice that every third week of the month, you've performed best. That could change a lot for you if you have that understanding. Then I want you to understand the same about your losing factors. What was your worst losing day? What was your worst losing week? What was your worst losing month? Worst losing day? What happened? Entry models, exit models, emotions of a leveraging. What were the things that influenced your worst trading day? There could be factors that are so simple, like I was trading from my phone instead of my laptop, or vice versa. Somebody will say I was actually trading off my laptop and I am used to trading off my phone. That is just an example. Or you may notice there was a specific time and specific period in my life that something was happening that was stressing me out, and that had a huge impact on my trading performance during that period. Or there might be a specific thing that was happening in the market. What led to it? What caused it? What was your worst week in the market in the last year? Understand that week. Understand the reasons behind it. Understand what was behind that losing factor that has made you to have the worst month in a 2023. What was your worst month? Don't avoid it. We're so easy as people to avoid the worst situations, and it's a coping mechanism. And this is how our brains work. Our brains work to, and I say all the time, your brain's job is to protect you and to make you survive on a daily basis. So your brain will do anything to help you do that. So when it comes to your worst trading month, or the worst investment, or you have lost the most money, your brain will do everything to close that up in a little box and throw it away, to repress that memory. But we don't want you to do that. We want you to understand that memory. What was the cause of it? We need to break it down. We need to understand the emotions behind it. We need to understand, what was happening in your life at the time, what was happening in the market, what were the choices that you were making. Because as you understand that, you are gathering data as well. And as you gather that data, then you can change those things for the future. So when you get early signals in 2024, you can protect yourself. So you can be proactive and you can protect yourself rather than being reactive. We don't want you. If you had that worst trading month, there were reasons behind it, potentially other than just technical analysis. So I really encourage you to understand that and search for those learning points for yourself. What initiated it? What happened? What made it continue? What was the factor that made you continue, go forward with that losing week, month? What made you go forward and continue self-sabotaging? Now, third question or last question in regards to that is, what made you stop? What broke that cycle of self-sabotage? What happened that made you think, what am I doing? Think about it. It's so extremely important. So extremely important. Now, thinking about your trades and understanding all of that, now I want you to ask yourself things about timings as well. I want you to take that into consideration. Was London session the best for you? Was the New York session the best for you? Do you trade one or both at the moment? Now, you may find that London session gave you most of the profits. This is where most opportunities, or maybe it didn't give you most of the profits, but it gave you most of the opportunities but perhaps you have not capitalized on those opportunities because of your emotions, etc., etc. But at least you understand the potential. What you may notice about New York session, that according to your trading style and your strategy, actually you are somewhere around break even. So I would say, don't waste your time with New York session and focus on sharpening your skills here. You may notice that actually there is an equal distribution between London session and New York session. And equally, you had opportunities for both. Okay, fantastic. So is there a specific time during London session? Is there a specific time during New York session? I want you to understand the averages, the quantitative data between that, and what distinguishes those sessions to be better or worse. What about the win ratio for London session, win ratio for New York session? What is the loss factor for both of those sessions as well? Obviously, it may not relate to you if you're a day trader or a swing trader. You may be more looking at the weeks. Whereas if you are a day trader or intraday trader or a scalper, those are the factors that you need to pay attention to. As a scalper, you may even need to break down the London session into 4 different periods of London session and 4 different periods of New York session, because each candle may be behaving differently depending on what is happening in the market. When the 4H candle closes, when the New York session opens, when the stock market opens during New York session, etc., etc. So by using this analytical data, you can visualize the performance, what it was and what it would be like and what it could be like when you apply all that knowledge into 2024. Remember, everything always runs in patterns. There is a pattern to everything. And there is a reason perhaps why you perform a certain way in the morning to why you perform a certain way in the evening. Everything is interconnected with one another. Nothing stands alone in our behaviors as human beings. You might be more sharp in the morning and you may feel more focused, whilst by the time it gets to New York session, it could be things you had lunch. And the lunch, because genuinely, when we digest our food, it slows down our brain. And then that is the reason why in New York session, you may not be performing as well. There are some things I've noticed about myself throughout my trading journey. I don't eat till about 12 or 1 p.m. my first meal. And I perform way better when I apply intermittent fasting. And then I eat mostly protein and veg during the lunchtime, so my digestive system is not overwhelmed, so I can stay sharp also for the afternoon. And only then in the afternoon, I would have dinner where my digestive system can kick in properly, and then it can just, do its thing without me being overwhelmed or feeling sleepy or having a brain fog and stuff like that. All of those things, all of those sessions about trading psychology, they are not about us meditating, understanding. It's about getting to know yourself. All of those sessions are here to empower you with knowledge. And that knowledge should be utilized for you to understand yourself and understand patterns in your life, in your trading, and how it all contributes to one and the other result. Okay? Okay. Now, think about the destructive patterns. What happens that triggers you? From that trigger point, there are certain things that will happen one after another. 1, 2, 3, 4, 5. It's like a domino effect. So I want you to understand that, because it's not to say that the trigger will never happen, because the trigger could potentially always exist, i.e., it could be a stop loss. Something simple as stop loss could just trigger you. But as you will understand the pattern and how it evolves, this is where you can stop the pattern and put a stop to it and say, no, no more. And put a management technique into your day, into yourself, into your behavior, into your choices. Now, I want you to also understand your success patterns. That's why I want you to understand your best week and worst week, best month and worst month, best trade and worst trade. Not best trade based on because it was news, best trade in terms of technical analysis based on your trading edge. I want you to understand it. And I want you to understand your success patterns. What happens to help you retain success? Because remember, one very significant thing when it comes to success, when it comes to achievements, it is not one huge thing that you have to do. It is actually about small incremental changes that you will make every single day, and they're going to compound into something bigger. So I want you to think about what usually starts your momentum when it comes to success patterns. Is it when you rigidly implement morning routines? Is it when you do something throughout your day? Is it something in your behavior? Is it something in your environment? Is it something to do with time of the month? Genuinely, there could be things, listen to me. There could be things like when you're getting paid from your 9 to 5 and you got paid, you paid your bills, you've got a bit of money in your bank account. You feel secure, you feel good. You go out for meals, you buy yourself something. Life is good. Trading's good. But then let's say some unexpected expense comes in, your car broke down, or there is some fee that comes up or some bill that comes up, and then all of a sudden you start feeling that financial pressure. It's also getting towards end of the month, so you don't have as much money. So now your finances have an impact on your mood. And this is where the pressure starts creating itself in the trading world. I better pass this challenge because I'm sick of my 9 to 5. I need to get myself out of my 9 to 5, and I need to be a funded trader. I need to be independent. I've got enough of this. And this is where perhaps the self-destructive pattern happens. There are so many signs, but one thing that we have to do is stay conscious to those signs, understand those signs, because every emotion, every inconvenience tells us something. It's a signaling process. It's a signaling process. And this is the reason of doing meditations. People think that we're doing meditations because all of a sudden we are smarter, we are this and that. No, meditation helps you to pay attention to your thoughts. Meditation helps you to slow down your mind. Meditation helps you to understand your emotions. So then you are more conscious. You are more in tune with your mind, with your thinking processes. And your thinking processes link to your behaviors. This is the reason why it is so very much recommended. So I want you to think about that. Once you think about those things, I want you to think about areas of improvement. So once you think about all of those losing trades, how could you have improved on those trades? Again, by understanding, okay, maybe, what I am noticing is that my standard pattern for buys or sells that works, it doesn't specifically work around 8 a.m. when London opens, because there is such a high volatility in the market that pattern always fails. But because I've noticed that I always take that pattern as a first thing in the morning and I lose that trade, I take a stop loss. This is why I am put off for the rest of the day. And then it's just a spiral of bad emotions and behaviors. So maybe my first trade or first time I come to the markets after the analysis, it's from 8:30 or 9 a.m. onwards. So I will avoid that London Open volatility and then have a fresh outlook for the rest of the day. So I don't start my day on the back foot. I avoid it and I just pay attention to the rest of the day. That could be the improvement factor. The improvement factor could be that when price gets to a strong level weekly or monthly, you just need to wait for a little confirmation, because you are usually right about where the price is going to bounce off from, but you are too impatient and you want for the price to react, to react straight away. And when it doesn't, you enter and price moves down, takes you out, moves down, takes you out, moves down, takes you out, and then eventually goes your direction. So your bias and your analysis was not wrong, but your execution and your timing was wrong. So that's what you need to improve on. So it is not just as simple as you good trader, bad trader, this or the. No, you're all skillful. You all understand the markets, but you need to spend more time about tuning into understanding your edges, your patterns, your technicals, yourself. Okay? Now, I want you to also pay attention to your missed opportunities. And what were the missed opportunities in the market that you have not capitalized on? Because one thing that traders are doing a lot is, of course, they will record their TPs with pleasure, stop losses, and break-even trades. But missed opportunities are sometimes not taken into consideration. And those missed opportunities can tell you a lot, because perhaps a missed opportunity is going to tell you about what made you hesitate to take that trade, because maybe everything was perfectly aligned, but there was an emotion or something that has happened in a week or this or the other that stopped you from taking it. Or that you were waiting for a certain confirmation, but you may notice that you have missed, let's say, 20 trades, and 15 out of those 20 trades would have won. And then you will kind of reflect and think, oh, okay, but I always wait for that extra confirmation and I don't need to. Okay, so why I don't need to? Why did those trades work out? And why do they not need that extra confirmation? Oh, okay, because if we are going in the same direction, let's say as 4H and 15 minutes, I don't need to. But if I am going against 4H, then I need that extra confirmation. You know, things like that. It may tell you so much about it. Now, when you think about your improvement areas, also, of course, think about yourself. Because, again, it is easy to say what should be done. And when it comes to actually trading in markets, there is a human factor that comes into play. And there are factors such as emotions and decision-making flaws. Because sometimes it is about inputting processes to help you make better decisions. You know, because in the market, as traders, individually, we have to make a lot of decisions. And we have to make a lot of decisions about the data that doesn't exist yet. We need to predict what is likely to happen throughout the morning, throughout the day. So this is where I would like you to implement for yourself better decision-making processes. Now, looking at mindset and psychological growth, this is where it's an evaluation more about reoccurring issues. So I want you to write the list down of reoccurring issues. Now, issues or things that are positive and negative to help you identify the patterns that have led to certain outcomes. Okay, I want you to also think about your habits around those decisions. What has made you to make those? So, like we said before, you know, in previous slides about what led one thing to another, but then I also want you to think about habits in your life, on your charts. There could be just some bad habits, such as, like we mentioned before, trading on your phone. And just that one habit, we're going to take that away, and that may have a major impact on the way that you behave in the markets. Or it could be something like removing 1 minute time frame from your charts because you always look and you become impulsive. So it really is now about reviewing that and thinking, okay, how should I adhere to better routines and better processes to break my bad habits, understand your bad habits. And again, when you go to Funding Pips playlist, you will find a webinar and a workshop about habits and how to build positive habits. And we even shared on our Discord habits tracker to help you develop habits and to help you stay on top of things. So I want you to reflect on your past selves. So 2023 is your past self. What happened in January, February, March, that's not you anymore. That person's gone. You are in December. So I want you to reflect on that person that you were in January, in February, in March, in April, in May, in June, July. And I want you to write advice to that person. And I want you to advise that person about what they have done wrong, as if you were training them, and what they should focus on next year. Because you have recognized that they had this great ambition, but because of certain things they have done, they've not achieved what they wanted to achieve. And now this is what you would advise them to do. And believe me, detaching yourself from yourself is going to give you a deeper reflective process. Because notice this, even if you are giving advice to your friend or a family member, you've got all the right words. But when it comes to yourself, you don't know what to do. So this is the reason why, if you detach yourself and pretend like you are talking to a trainee and you are reviewing your employee's performance for the past year, you're going to be really raw. Even name that employee. Let's create your alter ego. Create them, name them James, Viola, whatever. Name him something and say, look, James, I think those are the mistakes that you have made. I think you had such great ambition, such great goals, and you have the skills to achieve it. But there were a series of things that you have done over and over again that made you self-sabotage yourself. And I think those are the strategies that you could implement to help you manage yourself better, to implement better habits, better routines, to manage yourself in those situations. When I was observing you on the charts getting emotional, you could have done X, Y, and Z instead. Please do that. Please do that. And I think that is going to give you a really good idea about what you want to achieve in 2024, including goals, including learning objectives, including what you want to achieve financially and trading wise. Because based on that reflection on that employee, you will create a plan for 2024. And that's going to help you to implement those better behaviors. And of course, I would encourage you, and I've done that myself today. I bought 2024 journal, 1-page journal. And I find that effective because I like jotting things down and I like planning and I like doing myself to-do lists and all of that. But sometimes I do it in different places and I want to have it in one spot. And this is where I can make a plan, I can reflect. So 1 page is perfect for me. I will make it full. Plan for 2024. Don't just stumble into it and repeat the same patterns. If you want to achieve new things, the change starts with you. You can't expect a change and do the same things over and over again. Change will not come from wanting things. Change will come from new behaviors, from new mindset, from new goals. But most importantly, from following up on those things that we want to achieve. So make sure to implement strategies into what you want to achieve. Now, I want you to develop that balanced mindset, okay? And I want you to now think about, as a summary, let's say, improvements on your risk management. I want you to think about, again, your entry points, your exit points, your stop loss placements, your risk to reward ratio. I want you to improve your risk management. There is always a way of improving risk management. And you could be the most skilled trader ever. And And you could be actually pretty good at trading psychology too, but you could be a very poor risk manager. Because remember one thing, everybody can make money in the markets, but not everybody can keep it. Professional trading, it's not about making money. It's about managing money. It's about longevity. That's what it is about. So that's why I want you to think. I want you to implement a rule-based system to manage your risk effectively. I want you to have predetermined plan for your entries. I want you to have predetermined plan for your exits. I want you to have predetermined plan how you are going to manage that trade. I don't want any decisions to be made out of temporary emotion. I want those decisions to be logically and effectively planned. I want you to think about your habit formation. I want you to think about identifying the habits that positively or negatively impacted your trading. And I want you to create a plan about reinforcing and altering those habits. Again, refer back to trading psychology sessions that already been done this year. We cover most of those topics. I want you to introduce accountability measures. Maybe create small group with traders from our Discord. Send yourself pictures of completing your habits, from journaling your trades, and to help each other maintain those new habits. I want you to develop emotional psychological resilience. I want you to reflect on the emotional responses to your wins, to your losses, to the pressure any pressure, life pressure, trading pressure, financial pressure that you are going to react to. I want you to plan for psychological strategies, because by understanding your responses to wins, losses, and to situations where you experience pressure, you will have better understanding of yourself, and therefore you can implement good strategies. You can use some of the Stoic principles. You can use some of the principles that we use from James Clear, Positive Habits. You can use principles of understanding your limiting beliefs. You can use principles from goal building. You can use so many different theories in order to help yourself. I want you to commit to regular well-being practices where you meditate, or whether you would choose to pray or exercise or go for regular walks or journal or listen to podcasts or finding support from somebody to help you with trading performance, or all of those things. You need to make actionable plan to develop, to move forwards. Yeah, and you need to reflect. You need to gather data for 2023 and reflect deeply. And as you reflect deeply, you need to make actionable plan about moving forward. And moving forward is about goal setting. It's about understanding, based on the review, that you need to set yourself specific goals that are SMART goals. Again, refer back to one of our webinars where we talk about goals being measurable, achievable, relevant, and time-bound. And those goals should be implemented for 2024, because how you supposed to get anywhere, how you supposed to know where you are going when there is not a map for you to get to that location. And what you are heading for is a place you've never been to before, because it's a new goal, it's a new height. So you need a plan, you need a roadmap, you need to know where you are turning. Because I will say, and I said it before, you are going from A to B and you've never been to place B before. Place B is a new height, is a new achievement. So you don't know how to get there. You've got ambition, but you don't know how to get there. And building goals, it's like building yourself a map of knowing where to turn left, where to turn right, what to do, how to do it, what are the potential difficult steps to eventually get there. And when you understand what is the road, you can approach that road at different speeds. You can rest sometimes. You can take appropriate measures. You can prepare. You can understand this is going to be a sharp corner. I'm preparing for this. It's not about speed, because people want to get from A to B at 100 miles per hour, but they have no idea where they are going. So they end up going round in circles, and they get more and more frustrated. And this is a visual representation of what is going on in their head from that speed. A mess, frustration, anger. You don't want that. You want to develop your skill. You want to move with your skill forwards, upwards. You want to outline the plan, and you want to sharpen your skills and knowledge to execute on your plan. And this may involve different things: reading books, practicing new strategies, collecting more data, taking more courses, coming to more webinars, reflecting, journaling, meditating, seeking advice. It could be so many different things, but that's what growth is about. It's not about sitting in a comfort zone. It's about stepping outside of the comfort zone and challenging yourself every single day. It's about developing strategies to improve your emotional control and your decision making. That's what I need you to do. I need you to make strategic plan adjustment. Has your plan worked? Has your plan not worked? What are you going to do next? So I need you to start applying all of those things, and I need you to reflect on all of those things. And now, plan moving forward is you. This is a big explanation mark. You. Nobody can do it for you. I can't do it for you. Nobody can do it for you. And nobody is coming to save you. And nobody is going to hand you in your trading success. Nothing is going to happen without you. It is now down to you. Okay, maybe this trading year hasn't been the best. Maybe it has been the best. But for those of you that it hasn't been the best, that's fine. That's fine. Don't worry. It's about what you're going to do with this lesson and how you are going to move forward into 2024. And then we are going to have a conversation in 1 year, and really you can achieve all of your dreams. Imagine that the next conversation we're going to have, well, we're going to have multiple more, but when we are going to review your year in 2024, imagine that you achieved all of those things. How it feels to be there. But that will only happen if you will now take it seriously, review those failures, review those shortcomings, review those things that didn't work out, and utilize that to your advantage. You're going to become more powerful, more knowledgeable. You'll have more insight, and implement that knowledge into 2024, because 2024 can be your year. And it already can be your year, but it's down to you to implement everything that we have talked about, to look back at things and to go over certain things over and over again, not to rush it, but to ponder upon things and think about them. That's what it is about. And I believe in you. We believe in you, all of us. That's why those sessions are happening, because we want you to move forward. We want your success. And I'm not here to only give you knowledge, but to guide you through it. But I can't guide you through it if you don't want to come with me. And you can only come with me to those heights and to achieve what you want to achieve when you will put in the work. So guys, thank you so much for this session. Thank you so much for your wonderful feedback. And I'm so happy that you have enjoyed this session. Now, I want you to spend the week or towards the end of the year on deep reflection. And then next week, we are going to talk a little bit more about planning for 2024, and maybe a bit a mixture of things, a bit of a motivation speech maybe again, but most of all, spend time with yourself now and on reflecting. Okay, so guys, without further ado, thank you so much. And guys, I will speak to you very shortly. Thank you for this session. Thank you for the feedback again. I love it. Thank you. And I'll speak to you all shortly. Take care. Bye bye.